Hello all, today we're going to be talking about 3 cases in posting journal entry to the general ledger, and also we're going to be talking about trial balance and adjusting entries. We are still on the same topic, intermediate accounting. So let us begin our lesson for today. Case journal entry and posting. The first case is October the 2nd, Pioneer Advertising receives a 12,000 US dollar cash advance from Arnox, a client for advertising services that are expected to be completed by December 31. So this is the journal entry for the first case. October the 2nd, cash is increasing on the debit side and unearned service revenue is also increasing on the credit side, meaning that the company received cash from Arnox for future services or for future service. Alright, we have to remember that all kinds of revenues are increasing on the credit side. What is unearned revenue? It is originally entered in the books as a debit to the cash account and a credit to the unearned revenue account. This journal entry reflects the fact that the business has an influx of cash, but that cash has been earned on credit. It is a prepayment on goods to be delivered or services to be provided. On the other words, we can say that the cash is received now in the present time and the company will give the goods or services in the future. Alright, so this is the general ledger. We post the journal entries over here. We can see that this particular table for cash is increasing on the debit side, and the particular table or the general ledger for unearned service revenue is increasing as well on the credit side. Let's move on to the second case. The second case, October the 3rd, Pioneer Advertising pays 9,000 US dollar office rent in cash for October. Okay, so these are the journal entries. We add 9,000 on the debit side for rent expense. We subtract 9,000 on the credit side for cash, meaning we have spent money for renting the office. Alright, let's move on to the general ledger over here. As we can see, this is a particular table or the particular general ledger for cash and also for rent expense. I still put the amount from previous case here so you can see what will happen for this table or for this general ledger. We have seen the movement of our cash. Over here, there is an increase and also there is a decrease there. Alright, and for rent and expense, there is an increase in the GL. We call this particular table as a general ledger. Don't forget about that, okay? Let us move on to the third case. October the 4th, Pioneer Advertising pays 6,000 US dollar for a 1-year insurance policy that will expire next year on September 30. Okay, so this is the journal entry for prepaid insurance. We can see here that there is an increase for prepaid insurance and there is also a decrease on cash, meaning that we have paid for insurance, we have spent money for insurance around 6,000 US dollar. What is the definition for prepaid insurance? It is a part of prepaid expenses. It is a prepaid expense. Assets paid for and recorded before a company uses them are called prepaid expenses. When a company incurs a cash, it debits an asset account to show the service or benefit it will receive in the future. And we will talk further about prepaid insurance later on the next chapter or on the next video. So let's see our GL forecast. Now we can see there are three movements here from October the 2nd to October the 4th. We can say also that our current cash balance in bank is beginning balance plus 12,000 US dollar minus 9,000 US dollar minus 6,000 US dollar. Let us assume the beginning balance is around 10,000 US dollar. This is only an assumption. If we calculate everything, the current cash balance is around 10,000 plus 12,000 minus 9,000 minus 6,000. It will be 7,000 US dollar. Okay? There is an increase for prepaid insurance as well, around 6,000 US dollar. Okay. I hope I did not talk too fast. Just let me know if I talk too fast. You can just comment down below so that I can explain it slowly. Okay? So let us move to the next topic. The next topic is trial balance. A trial balance lists accounts and their balances at a given time. A company usually prepares a trial balance at the end of an accounting period. The trial balance lists the accounts in the order in which they appear in the ledger, with debit balances listed in the left column and credit balances in the right column. The totals of the two columns must agree. The trial balance proves the mathematical equality of debits and credits. Let me repeat it one more time. The trial balance proves the mathematical equality of debits and credits after posting. Under the double entry system, this equality occurs when the sum of the debit account balances equals the sum of the credit account balances. A trial balance also uncovers errors in journalizing and posting. In addition, it is useful in the preparation of financial statements. The procedures for preparing a trial balance consist of the first one, listing the account titles and their balances. The second one is totaling the debit and credit columns. And the third one, proving the equality of the two columns. For example, we can see here, I have provided the examples already. The trial balance prepared from the ledger of Pioneer Advertising Agency. Note that the total debits is around 287,000 US dollar, equal the total credits, which is around 287,000 US dollar. A trial balance also often shows account numbers to the left of the account titles. A trial balance does not prove that a company recorded all transactions or that the ledger is correct. Numerous errors may exist even though the trial balance columns agree. For example, the trial balance may balance even when a company, first one, fails to journalize a transaction, or the second one omits posting a correct journal entry. The third one, posts a journal entry twice. The fourth one, uses incorrect accounts in journalizing or posting. The fifth one, makes offsetting errors in recording the amount of a transaction. In other words, as long as a company posts equal debits and credits even to the wrong account or in the wrong amount, the total debits will equal the total credits. Okay? All right. I hope all of you can understand it very well. Alright, so let us move to the adjusting entries. So this is the beginning explanation for adjusting entries. Okay, in order for a company like McDonald's, for example, to record revenues in the period in which it earns them and to recognize expenses in the period in which it incurs them, McDonald's makes adjusting entries at the end of the accounting period. In short, adjustments ensure that McDonald's follows the revenue recognition and matching principles. The use of adjusting entries makes it possible to report on the balance sheet the appropriate assets, liabilities, and owner's equity at the statement date. Adjusting entries also make it possible to report on the income statement the proper revenues and expenses for the period. However, the trial balance, the first pulling together of the transaction data, may not contain up-to-date and complete data. This occurs for the following reasons. The first one is some events are not journalized daily because it is not expedient. Examples are the consumption of supplies and the earning of wages by employees. The second one, some causes are not journalized during the accounting period because these causes expire with the passage of time rather than as a result of recurring daily transactions. Examples of such costs are building and equipment deterioration and rent and insurance. The third one, some items may be unrecorded. An example is a utility service bill that will not be received until the next accounting period. Alright, adjusting entries are required every time a company such as Coca-Cola prepares financial statements. At that time, Coca-Cola must analyze each account in the trial balance to determine whether it is complete and up to date for financial statement purposes. The analysis requires a thorough understanding of Coca-Cola's operations and the interrelationship of accounts. Because of this involved process, usually a skilled accountant prepares the adjusting entries. In gathering the adjustment data, Coca-Cola may need to make inventory counts of supplies and repair parts. Further, it may prepare supporting schedules of insurance policies, rental agreements, and other contractual commitments. Companies often prepare adjustments after the balance sheet date. However, they date the entries as of the balance sheet date. Okay, let us move to the next slide. Types of adjusting entries. Adjusting entries are classified as either prepayments or accruals. Each of these classes has two subcategories. Prepayments. The first one, prepaid expenses. Expenses paid in cash and recorded as assets before they are used or before they are consumed or before you use the goods or before you use the service. Okay? The second one, unearned revenues. Revenues received in cash and recorded as liabilities before they are earned. Okay. Accruals. The first one is accrued revenues. Revenues earned but not yet received in cash or recorded. The second one for accruals, accrued expenses. Expenses incurred but not yet paid in cash or recorded. Alright, so this is the end for this video. Thank you very much for listening to today's lesson. See you all again very soon. and have a great day. Bye.